Hey, happy Thursday, everybody. Sorry I missed you guys yesterday. We got real busy yesterday in the trade room. So sorry about that. But look, guys, you know, we had an unemployment report this morning and it was not good. More claims than we expected, right? Which is a little shocking right now. Again, we've been talking about this with the Dow and 35,000, right? It just can't get above that and close above that for some reason, and that's telling us something. It's telling us something about this recovery. It's telling us about the economic growth and things like that. And it's not good. At best, it's discombobulated right now. So look, we're playing the short term right now, but we're keeping our cards close to the vest. We've talked about this before. In particular, our option plays right now, we've only got the two oil plays, which are all the way out to September, and we've got the one travel and leisure play, which is out to the end of August. And in between, we've been playing the indexes. We played the spider, right? We were short the spider from last week. We got the big sell down on Friday, and it carried through Monday. We cashed that thing out at a nice, easy 80% in a few days. Then we rolled into the Q calls, and we cashed those out yesterday morning. Now, you might be thinking, well, why cash those out? The queues are still running. Well, if you're looking at the market right now while I'm recording this, you can see those queues are starting to roll over. And here's the thing, they expired tomorrow. So why look a gift horse in the mouth? We'd take that 80%. And what we did was we rolled into an Apple earnings call, which we're already up about 30-40% on. And Apple has earnings on Tuesday. We'll play those kind of plays for right now. But we'll play them very singular, and we won't get too deep into this because things change. And that's why we cashed those Qs out yesterday. It's easy to say, well, you left some money on the board. It's like, no, we didn't. We protected that profit. And, you know, if the market had rolled over yesterday afternoon, or if it rolled over this morning, guess what? That profit's gone, and you got about a day and a half for it to come back. And that's probably not going to happen, right? So we took that 80% and we rolled it into some Apple calls at 150 that expire next week. Those are up 20, 30, 40%, depending on what time of the day you're looking at them today. Apple's been having a nice little 1% run, 1.5% run this morning. And we think that'll continue into Tuesday. It's lunchtime right now. It's about 6:08 a.m. here in Honolulu. So it's about 12 o'clock in New York. And so we've noticed that. Have you guys noticed that with the stock market, especially the NASDAQ right now? Whatever bad news or news comes out in the morning, the market, it's a little fugly, right, for that first half of the day. But it goes into lunch and it kind of just lulls there. And then coming out of lunch, the market has a short memory. So we're going to hold on to this Apple trade. We think we'll get a run at least up into earnings. And the thing is with this Apple trade is we're looking to get out of it before that earnings report after the bell on Tuesday. So we'll kind of let this thing digest. I know it's been up as much as 40%. I know it gets down as low as 10%, 15%, but we'll let this thing kind of play out right now. Too early to panic on that one, especially we just bought another week, right? But let's get back to the stocks, because I've been talking about it for months now, guys. Getting good stocks in your portfolio with dividends, that's your best protection for any kind of economic uncertainty and maybe a slowdown in that and stuff. Maybe inflation rears its ugly head again. The Fed, right? The Fed's kind of defenseless right now if that does happen. And that's probably the big worry. Oil, right? We're in those oil plays, and we told you guys 3 days ago, don't panic over that sell down in oil. And you see it just pop right back. It's trading about $71. In fact, let's go look at some charts together, guys. Let's pop on over to TradingView and look at some charts together here, if I can figure out the controls here. You know how it is watching my show. Anyways, so there we are. We've got some charts, and there's your oil chart there. You see that big sell down there when we hit that 75? Remember, we were talking about this. Oil will push higher, it'll consolidate, then it'll move higher. Then it consolidates and it moves higher. Sometimes you get a little longer of a consolidation, but this thing is on its way to triple digits, at least the high 90s. And we'll see for sure over time, but so far we've been pretty correct on this. That great time to get into some energy stocks there, right? You had that little pullback opportunity on something that's very bullish. And so we'll stick with those two. Their ET Energy Transfer is one of them, and the other one is God, I can't even remember my own place. MRO, Marathon. Those are the two we like going forward. We might add something else here as this market kind of digests what's going on right now. But for right now, like I said, we're keeping it light and tight. Now, that doesn't mean in our portfolio we don't own our usual list of characters, right? Big holdings for us are Apple. We love Apple. NVIDIA, we own NVIDIA, right? In our slice portfolio that we built with $500 about a year ago to teach people how to use the slice, right? Slice, of course, on Schwab is you can buy partial shares. You can do it on Robinhood. You can do it on most brokerages right now. What if you only had $500? How do you get a nice, diverse portfolio? NVIDIA was one of those. I just had a big stock split, and it looks like it's pretty bullish right now. And same thing like Apple, right? We put Apple into the slice portfolio before the stock split. Well, the thing kind of gyrated down and went sideways after that. And people kept saying, oh, you know, should we buy, oh, why did we buy Apple and stuff? Well, we got the 3 free shares, right? When it split. And we had to weather some of this time when it was just languishing and digesting that and some other news and stuff. We know how Apple is. But it's the same time we're collecting 88 cents per share every 3 months, and we're in a great stock. And guess what? Now that thing's 147, 146, 147. Where is Apple right now? Yeah, see it about 146.95. So good job. And that's how we manage the rest of our portfolios, guys. Let's go take a look at some other stuff. Bitcoin, you Bitcoin players, same thing, patience, right? Like I tell you about your portfolio, the great secret Wall Street doesn't want you to know is compounding and patience. There's never any reason to go to cash. You know, you hear that all the time. Oh my God. On CNBC and stuff, right? Go to cash. You know, why would you go to cash? If you've got the right stocks, they will come back. And if you've got the right stocks, they'll buy themselves cheap over those bad times. So sometimes you get these quick V bottoms, right? Like that we got in the last couple, like with the COVID and stuff, it didn't even make it through. That bottom didn't even last between earnings seasons, so nobody got any dividends cheap. But that's how you protect yourself, especially in a bear market. When a market goes sideways or it goes down, you know, that 10, 12%, and it just kind of stays there for a while. We haven't really seen that. You young investors haven't really lived through a real bear market yet. The one thing that'll save you isn't going to cash. It's having your money in great stocks with strong dividends. Because at some point, remember what I always tell you guys, at some point, there's never been a 10-year period on the S&P 500 where the start point wasn't lower than the end point. The end point's always higher. So that tells you, you buy a great stock, you buy a great company, you get great dividends, and sometimes through that, you just sit. Your money is working for you. In cash, it does not work for you, especially in a low interest environment right now. Cash is a poor man's asset. It's what you usually spend. But look at Bitcoin. We've been same philosophy with Bitcoin. Remember when this thing started selling down? We just started getting into the Bitcoin game right back here. And we said straight up, just sit through this, wait for it to bottom. It'll show you where it's going. It's been sideways. We just saw an article this morning. Somebody is talking about maybe we're in the 3-year winter of Bitcoin. You know what? As far as we're concerned, that's fine, because we'll accumulate here. And then when this happens again, we'll have plenty of Bitcoin. We'll have plenty of cryptos and stuff. So patience, patience, patience. And you can see it plays true. We had that big sell down, right? And then we hit that bottom. We charted it and we said, this should be the bottom. And look at twice it was true, right? We were crypto buyers 2 days ago when we saw it get to the bottom of that channel. And now we've got some nice cheap crypto, especially the Shiba coin. We'll do a crypto show tomorrow, guys, for you guys that follow the crypto show. And you know what we're up to with that. But we got some Shiba dirt cheap yesterday, and I had $20, bought like 4 million tokens. Again, you don't want to be here buying, right? We just got into the crypto game, right? We just started our crypto adventure here. So it's unfortunate that we had to do it at a high, but we wanted to get started. And then once we got started, we just adjust. We didn't sell, we didn't panic, we didn't bail. What we did was we sat through this, waited till it bottomed, and then started accumulating some more at a nice cheap price. And so now those crypto prices are at a nice cost average. Hey, other than that, guys, look, we've had some interesting news this morning, right? We had the airlines report this morning. We had, I believe, Love. Love is one of the stocks we own. Got a little beat up this morning. Had good earnings, but look, those profits were all about free federal money. It was stimulus money. And the market realized that. But we like the way the airlines are going, and Love and Hawaiian Air are a couple of our favorites. We got Hawaiian Air earnings coming up in about a week, too. So, and that's what I'm talking about. Like with these airlines, you buy them cheap, right? We bought Love cheap. We're already almost at a double on Hawaiian Airs and stuff. I think we bought that thing at $11, $12. Love, same way. We bought it dirt cheap. And you just look, if it comes down and you need a little bit more in your position, you build a little bit more. But you don't panic and you don't sell because the thing's going to pay you dividends, the thing's going to do this, and it's going to come back, right? We had one of our members talk about United Airlines this morning. And I was saying, that's a great stock. United Airlines is not going anywhere, right? That company has been around forever and it'll be around forever. It's like GGP was back in the 90s, right? Even if it went bankrupt, the government will bail it out. The government will sell it. It's to nobody's advantage, especially the US government, that United Airlines goes out of business. Pays a good dividend, right? It's got a big, huge company. It'll recover with the economy. So why not? You're buying it on the cheap. UAL had good earnings too. We had Twitter earnings this morning, right? Twitter got a little beat up this morning. It's kind of back to even right now. Yeah, it was a soft lunch. You can see Apple pulled back. The whole market's pulled back and stuff. But other than that, the news wasn't real detrimental except for that freaking labor report. Now, like I said, the afternoons have shown, and we've seen it pretty much for 4 or 5 weeks. The market has a short memory in the afternoon, right? It seems to push higher and higher. So we'll see if that plays out true today. It's so far it has. But just manage your wealth properly. Manage your wealth with some sensibility and some patience, and don't panic. Don't. The worst thing that can happen is you let your emotions get into it, right? This economic growth. Look, we've got this big vaccine battle going on between the vaxxers, the anti-vaxxers on the COVID vaccine, and really you can blame this on our government. Why there's so much problems with getting shots in people's arms and things like that. You think about it. It's the messaging. And I don't care if you're a Democrat, if you're a Republican, if you're a progressive, if you're a socialist. I think we all can agree on this, that our leaders failed us in the sense that they were so attached to their political gains and their political power. You had current leaders like your vice president, right? Just 7 or 8 months ago was sitting there saying that any vaccine that came through the other administration, they would not trust them and they probably wouldn't stick them in their arm. And now they're out there telling the American people, hey, you should be getting vaccinated. It's the same vaccine, but it's just that your boy's in the White House. And so now it's all okay. It's that kind of mixed messaging, guy. Again, remember, it's not about being left or right on this. It's about getting correct information out. We've had this big thing about Facebook and misinformation and you know what I mean, killing people and stuff like that. Oh my God. If I hear one more person say, oh, it's Jim Crow or it's killing people or something like that, or vote like it's the end of your life or whatever, excuse me, my God, it's like the only people that are treating this like that is the American public. Our leaders don't give a crap. You got to be honest about this. The mixed messaging from the WHO, the mixed messaging from Fauci, right? 6, 7 months ago, the kids were okay. You know, we weren't worried about them. 6, 7 months later, for some reason, we have to have them in masks all the time and stuff like that. I don't know. It's just mixed messaging. Even if you guys know me, I'm pro-vaccination. I'm vaccinated. My whole family is vaccinated and stuff, and I support the vaccine. But I absolutely understand why people would be against it. And what happens with this mixed messaging too is it fuels the other side, right? It gives them even more reason, even more excuses. They can use your own words to make a good case for why you shouldn't get the stab or something like that. But look, guys, let's see how the market shakes out the rest of the day, okay? We can go take a look at the markets real quick here. Let's pop on over. Let's pop on over and take a look at the markets here. With it refresh. Several major websites go down in widespread internet, but you see how that market's rolled over red. The VIX is spiking a little, but it's not in that danger zone at 20. It just shows a little bit of fear coming back in the market. But there you go. You got a little bit more bad news. And on top of it, you've got the unemployment bad news this morning. I don't know. How much are we sold on this recovery coming through? You know, and it goes back to the old argument. Is the extended unemployment benefits starting to have a negative, or is it already having a negative effect on getting people back to work? Again, mixed messaging. It's just like in Hawaii. We're having 30, 40,000 new tourists come in a day, and that's okay. But our businesses are still shut about 50% and stuff. Even restaurants and stuff like that can only go 50% capacity. So it's okay if you've got a shot. It's okay to be on a plane. It's okay to do that stuff. But where you sit next to somebody, and as long as you're wearing the mask, you're okay, right? But you can't sit right next to somebody in a restaurant, even if you've got the shot. Right? You have to stay at 50% capacity. Mixed messaging, guys. Again, it's not about Republican and Democrat right now. It's about our leaders getting on the same page and staying on the same page. And we'll see how this plays out, because it's starting to have some kind of an adverse effect there. And let's go across the board here. You can see that 10-year bond that everybody likes to focus on, still real low. It had a big dip yesterday, right? It got to that 1.2 and it's kind of held there. Oil, we talked about, right? Despite that OPEC adventure that started a few days ago, oil's right back up to $71. Gold, is there an inflation fear starting to creep back in the market, right? The deflation event pushed it back down. It was popping up right a few days ago, pushing towards 1850, and then it got under 1800. It's kind of spiked a little bit back over 1800. Is the inflation fear creeping back into the market, right? And of course, you got your cryptos. Your cryptos got real ugly. Money got bearish, right, across the board, right? We saw it, right from stocks to bonds to oil to gold to cryptos. Everything was negative for a few days, a couple days there. And that's maybe there's some effect on this. So we'll see how we move going forward, guys. We've had like a good retail report. We've had good, we're starting to get a reasonable CPI and things like that. But we need to get all on the same page, and we need to get some direct movement out of this market. So other than that, guys, look, let's check the market one more time. I'll be back tomorrow with we'll have our usual crypto show. We'll have our usual end of the week update. We need to get people back to work. We need to get jobs open. We need to get jobs filled. We're not doing that. That was a surprise number. Even I was surprised. You guys know I've been talking about it. There's some messaging that we're getting from the Dow that it can't close above 35,000, while the other two major markets are making all-time highs and closing at them. Whether it's economic uncertainty and stuff like that is another thing. But we want to we want to be cautious right now and see how it kind of shakes out. Again, it's the third quarter of 2021. We're supposed to be in an economic boom by now, right? At first, it was if we can get a vaccine, everything will be okay. We can reopen and stuff like that. Well, now we've got a vaccine, and now that's turned into a big old tumble about whether or not you should actually get the vaccine or not. It's always something, right, guys? So just look, protect your money, protect your wealth. Nobody else will. Um, and be very cautious. That's how we're playing it right now. Like I said, we've got 2 oil plays for September going on. We've got that travel leisure play going on for the end of August. We've got this Apple earnings play that we're in right now, and we're just letting that kind of play out. Those don't expire till next Friday. We got nothing on the board for tomorrow expiring. But the rest of our portfolios, we've got them in great stocks. You're looking for some great stocks, go check the back stock of the weeks. As this economy starts to give us some resolution and some definition, and the market gives us a little bit more definition, maybe in the Dow and stuff, we'll start doing stock of the weeks then. But right now, you should be just filling your portfolio, at least maybe about half your portfolio in great stocks. Look at the Apple trade, right? We've always owned Apple in that part of our portfolio, and now that it's on this big run and stuff, and earnings are coming around, we're double dipping, right? We're in these options which we're making money on, and we also own the stock. And guess what? If it's earnings season, we're getting another dividend, 88 cents a share there. That's not bad. That's nothing to sneeze on a $1 billion a quarter company. So, you guys have a great afternoon. You guys enjoy. It's birthday weekend for me, so we'll do a quick show tomorrow. We'll do a quick crypto show tomorrow, and then I'm done till Monday. But other than that, you guys trade safe, trade smart. Don't be petulant. Don't be impatient, and just don't be just don't be crazy. Anyways, I'll see you guys tomorrow.